Hello everyone and welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday the 24th of October. It is the ECB monetary policy meeting today, and it is the final monetary policy meeting for Mario Draghi, where he then vacates the role and to be replaced by Christine Lagarde. So it's going to be a bit of a love-in, I reckon, today at the ECB. But interestingly enough, there's not going to be anything real to go on with regards to monetary policy decisions. I think that the ECB are going to be basically spending the meeting just trying to justify this package of measures that it introduced, or reintroduced, I pretty much should say, last meeting. So interestingly enough, the flash PMIs that have come out today have really reflected the fact that the ECB does need to continue to put these measures into place. Look at this composite PMI 50.2 for October. That would suggest that the first month of the final quarter of the year and the Eurozone still is no closer to any realistic form of recovery. Very stagnant growth. It sort of suggests a run rate of around about probably even less than 0.1% growth going into the first month of the final quarter of the year. So subsequently, the Eurozone remains under pressure, and subsequently the ECB needs to continue to hold an easy monetary policy stance. And Draghi's final parting shot, I reckon, today will probably be something along the lines of the governments need to do their heavy lifting as well and engage in fiscal stimulus to help the ECB, but certainly the ECB is unlikely to do anything too drastic today, considering the package of measures it did last month. Now, with regards to where markets are sitting today, Euro is basically flat. It was up around about 15 pips or so. It's now lost those 15 pips in the wake of the flash PMIs that have just come out. So subsequently the Euro's dropped back. Sterling has been fluctuating around that 29 big figure mark. Seems to be around there or thereabouts that point at the moment. It's been consolidating pretty much as the UK waits for the decision of the EU27 as to whether it can have an extension to the Article 50 process, the deadline beyond 31st of October. Now, broadly speaking, markets are a little bit consolidating really in front of the ECB. Euro dead flat at the moment. Dollar yen mildly lower, little bit of a risk aversion play there, but also you can see through Aussie and Kiwi a little bit lighter on those markets. Now I'll show you the Kiwi as my chart of the day in a bit, and we could be seeing a potential opportunity there for the Kiwi. But in terms of equity indices, a little bit higher, about 0.5% higher on the equities at the moment this morning. We had a slight gain on S&P 500 futures, S&P 500 yesterday, and the futures are basically flat, so a little bit higher today, but I think a little bit of a consolidation likely to be seen in front of the ECB. Now, interesting move we saw yesterday on oil, started to break out to the upside. Now, a larger or an unexpected drawdown in the EIA inventories helped to drive that move. Now, can it hold the breakout above $55 would be the question on WTI. But a little bit of a slip back this morning, but nothing too drastic as yet. So that takes me to my chart of the day, which is, before I get into that, US data this afternoon. US data, we've got durable goods at 130, expected to be a slight decline on the month, 0.2%. Weekly jobless claims as is normal, around about 215. Flash PMIs for the States, again expected to see no real improvement there, around about 50.7 on manufacturing services, 51. New home sales slightly slipping back. But okay, my chart of the day is the Kiwi dollar. Now, what we've seen in the recent last few sessions is this strong move higher on the New Zealand dollar, actually breaking out, forming a little base pattern. That base pattern implies around about 150 pips worth of recovery, so 65 big figure. Now between that you've got 64.50, 64.80, this pivot of the middle of the year, pivot range there. And I think the market is sort of developing into a test of that, and you can see here through the momentum indicators having improved quite strongly across the past few weeks actually, and I think that they have now turned into a position where they're a chance to buy into weakness, because you've got the RSI decisively above 50, that's multi-month high, as are the MACD lines. Stochastic's also strong, so I think this has turned into a nice little opportunity, this little corrective slip that we've got going on here today. You've got the breakout at 63.50, that's supportive, but then 63.85, yesterday's low, also there supportive. You can see that on the hourly chart. So the market's just unwound some of this little bit of exuberance. Again, you could see it possibly back to 63.50, but I would be expecting to see support forming around that sort of level, and I think that that would start to be seen as an opportunity to buy, because the Kiwi does look as though it's positioning a bit better and a bit stronger for a recovery and a test of that 64.50, 64.80 resistance overhead. Okay, so with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Also go to our website where you can sign up for our webinars.